Alright, good morning guys. Jason Greystone here from Trade Empowered. There's been quite a bit of junk in the markets this week so far. Yesterday in the live room wasn't too much opportunity. Was looking at a New Zealand dollar trade, which I didn't get filled on. I just missed my entries, but there's not too much on the radar today. So I just thought I'd share with you one setup that I'm looking at that could potentially play out later into today. So we're looking at the Aussie CAD, and if we go out to the daily, you're going to see that we actually put in a higher high, higher close yesterday. So we are bullish. This is a trend continuation trade, and the next level of support here, looking left on the higher time frame, is up here at 10320s. Okay, so we've identified that the market's bullish. We're predicting where market's likely to go. Now we know that market moves in two ways. It's likely to either go straight up, or we'll get a pullback which will allow us to hopefully get involved and ride this thing up. So as we drop down to the lower time frames, we can start to identify and build out a kill zone, or the optimum place for entry if we are likely to get a pullback. Now the first thing I'll be looking at is this higher high higher close is the resistance level. So resistance should become support, and we can start to build out our kill zone. So if we're looking at this as a trending market, this is the higher high higher close, this is the outside return. So the kill zone essentially is here, anywhere in this zone. As long as we don't violate this low, this is still a valid outside return. So anywhere from resistance should become support to our previous outside return is our initial kill zone. Now the problem with that, if market is to pull into this zone here, if we was just to enter at market as soon as we touch this area here, as soon as market pulls into this area here, well then the thing with that is I'm only a trend continuation trader, which means I'm shooting for retest. I'll have my targets at a retest of the high. Now if my stops need to go below the low, well that's not going to provide me with a 1-to-1 risk reward, and I want a minimum of a 1-to-1 risk reward. I prefer much more than that, but at least a minimum of a 1-to-1 risk reward. And you can see if I enter that market just as we push into previous resistance, I'm not going to get that 1-to-1. And if you take trades like this time after time after time, you've got a very high probability of blowing your account. So that's not something I want to get involved with. But what I do want to do is mark out and identify the area where I would like to get involved in this trade. So what I do want to do is identify where my stops need to go, so that I can start to narrow down this kill zone. So if I'm looking at placing an ATR based stop loss, and my ATR is going below this low, my stop loss is going to be around 1.0070, which means if I want a minimum 1-to-1 and I'm shooting for a retest of the highs, so if my stop loss is going down here at 1.0070, I know that I can enter around this area here, 0.165. That's going to be just under 100 pips of stop there, which is not ideal. That's not where I would ideally enter, but that's my maximum stop loss limit. We're under the 50% here, so I know that I'm going to get more than a 1-to-1. So now we can start to narrow down the kill zone, and it doesn't mean that that's where I'm going to enter. It just means that this is now my kill zone, and if price action doesn't push down here, well then guess what? I don't get involved. But I don't want to be involving myself in trades that have less than a 1-to-1 risk reward and have a low probability. Okay, I'd rather let price action come to me. There's no rush to get involved in this. Let price action come to me. Let my rules of engagement be met. So once we get into this zone, I'll be looking for my entry reasons, which would be a higher high, higher close candle in here. And then I can get involved, and I'll be shooting for a retest of the highs. So I did a video on higher high, higher close candles and lower low, lower close candles. So if you're unfamiliar with what I mean by that entry technique, then just go over and watch that video on the YouTube channel. But this is what I'm looking at for today. That's about all that's setting up. There's a couple of patterns setting up on a couple of the other pairs, but I thought I'd share this with you. It's a short video this week. The kids are off school, so not much peace for recording videos. So Good luck in the markets today, guys. If you want to go into the live room, I'll see you in there. www.tradeempowered.co.uk/London-live-room. And if I don't see you in there, be sure to subscribe to this channel and comment below. Remember, we're still looking for comments on video ideas as well, so any questions you guys have got around the subject of the currency markets or forex trading, shoot them in below, and we'll take them into consideration and start producing some videos with the most common questions. So until next time, guys, take care, and I'll see you then.